Welcome to the Kelowna Real Estate Podcast with your host, award-winning realtor Matt Glenn, and top-producing mortgage broker Taylor Atkinson. Professionals in the industry, enthusiastic entrepreneurs, and successful investors. When it comes to real estate, we're all in.
Hola, amigo. ¿Cómo está?
How are you?
I'm good. I am feeling fresh, back from a vacation from Mexico. And my tan is melting off as we speak.
I don't know. You look pretty golden.
Yeah, man. 8 days away from our son, just napping and eating tacos.
Is that the first time you've been away from him?
For that long, yeah.
You spent nights away from him, though?
Yeah, we've done a couple nights. But yeah, it was life-changing. On like day 3, you're like, oh, I feel like a human. Yeah. But also really awesome to come home, and yeah, they changed so much.
Yeah. So I think we've done a dinner away from our son a few times, but definitely not a night.
Yeah.
Although we have one coming up.
Yeah?
Yeah. We're going to our friend's 40th birthday party.
Oh, cool.
Becca's parents are watching him for the night. They're stoked. We're stoked.
Yeah, it is. I don't know. It's just good for everyone involved. But yeah. No, feeling good. We've been lining up some guests. We did a bunch of recordings before I left, and we're smashing them out right now. So
yeah, we got a really good guest lineup.
Oh yeah, it is killer. Mostly just from people spreading the word and our guests giving intros,
listeners recommending people.
Yeah. Also, our production team doing a killer job with some social media stuff. And we are up in our game.
Yeah, we are up in our game.
Yeah. I mean, nobody's told us that, but we are saying.
We've told each other lots of times.
Yeah. So today we have Jayson Zilkie. He is a partner at Shelter Lending. So we talk about private mortgages today. Essentially, we've got, our banks, monoline lenders, credit unions, alternative, private. And private kind of has maybe a bad stigma sometimes, but a really cool, powerful tool. So we cover all things private lending.
It was an informative episode. Like, private lenders are kind of a lifesaver.
Oh, right? The cost really is so minimal when you're talking about the savings that they have. It's almost like an insurance. Like, you want a private in your back pocket for sure. And he also served on City Council, City West Kelowna. So it's like 2-for-1 deal. We're getting somebody involved in the community.
Have him on DCC fees.
Oh, I know. Yeah. No, he was so fun to have on. Played some semi-pro hockey. Yeah, he's been in Kelowna since 1990. Just, cool guy in the industry. So we'll get into that. This is probably going to be some news that's a little bit late, obviously, because it'll be released a couple weeks from now. We're recording this October 17th, but inflation fell from 4% to 3.8%. So, some good news.
Should usher in a non-rate hike. Staying flat.
I don't know, man.
You think it's coming up still?
Hard to say. I've learned a lot from Brendan Ogmanson, our recent guest, BC chief economist. Yeah, 50-50 or maybe 49-51, hard to say. And I won't even specify where the 49% is.
I thought it was a foregone conclusion they're staying the same.
It's hard to say. So mortgage interest rate and rent costs were by far the biggest contribution to this. 12-month change on the CPI. The cost of servicing mortgage compared with previous September rose by 30.6% and rent increasing at a rate of 7.3%. So obviously that's the big contribution to inflation, or one of them. The kind of more volatile one, I guess, would be gas and groceries. So hard to say whether it's going to continue to decline, but hopefully it does. One of the economists from RBC on another article I'm looking at here, again, none of these guys really have a good track record. Essentially just saying that rates are still looking to be cut in 2024, but even if they do, significant decreases would not be given. So essentially, they're going to stay at a higher or today's rate for a longer period.
Most people in the market has accepted that the rates are going to be like in this range for a year or more.
Yeah. I don't think we're really at this point ever going to see pre-pandemic type of rate cuts unless there's a huge economic.
The low rate issue in the future is going to be like mid-3s, I think.
Oh, that'd be great.
Well, not in the near future.
God, this guy's going to be a new mortgage broker giving rates out that way. Anyways, we'll get to the show. Jayson Zilkie, everyone. And if you want to reach out to him, he's active on LinkedIn. He's a big family guy. Don't Call him on the weekend. He loves his Fridays. Yeah, you can also invest. Like we talk about private lenders and saving deals and being a good tool as an investor, but you can also invest. They are giving out on average right now about an 8% return.
For right now, for the whole time they've been a company.
Yeah. Paying dividends quarterly. Also really cool. You can just see their portfolio. I'm sure if you say, hey, send me a screenshot of where your properties, what the LTV is, like they're at a 65% LTV for their portfolio spread across BC and Alberta, and I think he said into the prairies. So reach out to be an investor with him.
Yeah, you can invest with him. You can borrow money from him.
Yeah,
it was an informative conversation.
Yeah, the guy does it all.
Yeah, he does.
Okay, enjoy it, guys. Okay, thanks for joining us, Jayson Zilkie.
Thanks for coming on.
So like every guest we have, we just like you to connect with the listener with a quick, what's your perfect Friday look like? What gives you energy? How are you productive throughout the day? What do you do for work? And then leading into the weekend. So yeah, have at it.
Yeah, that's great. So again, Jayson Zilkie, I work for a company called Shelter Lending. I'm a partner. We do private mortgages. And so we'll touch on that today. I've been married for just about 15 years coming up. We have 3 children, 9, 7, and 4. We actually have foster kids as well. So
awesome.
We have a little foster kid with us currently. And
glad you could fit us in.
Yeah, no, appreciate it. Life's every day is an adventure. So the perfect Friday is where a Friday I don't have to see anybody, not my family. No, just kidding. Yeah. So I mean, I get up before my kids and not super early, but just a little bit before them. I try and get in my word, read the Bible for a little bit and just kind of get up before the chaos kind of begins of family stuff. And so very fortunate to be able to kind of be around as much as I possibly can. So I kind of work remotely and work from home and as much as I can. So I can take my kids to school and then kind of start the day that way. So it's a great way to just kind of, we live close to school, so I can walk to school and it's just a fantastic way to start this. So it's a great day is that. And then on a Friday, once you're finished work and to actually be able to kind of check out and just to totally re-engage back with the family and just know that it's Friday. I love Fridays. I get so pumped and my whole family gets pumped. Like, you get like just, hey, it's Friday. Everyone excited about it. So you kind of have that infectious, hey, it's Friday. And then my kids come home and they're just high five and everyone's just pumped. So, just to start the weekend off the right way is a perfect Friday for me. So
cool. I'll make sure to email you at like 2 p.m. for a deal.
Yeah.
And you'll be like, yes, that's approved.
Yeah, I did it on my 8.
I love everything. Let's go.
That's right.
Yeah, awesome. Yeah, let's dive straight into private lending and, shelter lending. So can you give us like a 3-minute kind of elevator pitch? What is private lending for our listener that knows nothing about it? Obviously, most people are exposed to big banks. Some people know what monoline lenders are or credit unions, B lenders, alternative kind of stuff. And we work down from there. But yeah, what is private lending?
Yeah, that's great. So private lending is really just a way that the government actually stimulated economic funds to help basically people to get mortgages outside of the bank. And so when people don't qualify, private lending exists. So there's many reasons why private lending would be required. But really, the government actually, in their tax act, they have the Mortgage Investment Corporation, which is an act that allows people to invest in mortgages that are basically falling outside of the bank. So private lending is really for people who don't qualify for traditional lending for various reasons. Their credit score is too low, or their GDS or TDS are too high, or the property is not qualified for what the bank, or they can't get insurance. But really the number one is kind of income, and people being self-employed is really what we've kind of the most tranche of people that we've seen. It's not necessarily credit. It's really just people who don't declare enough income. They're self-employed. They're entrepreneurs. Maybe they have a couple of rental properties or whatever it might be, but they make a lot of money, but it's really hard for them to kind of disclose, or they don't declare enough. They have a lot of expenses and they have a good lifestyle, but the income is just not necessarily there. So self-employed people, it's really difficult for them. I'm technically self-employed and I just recently got a mortgage. It's very difficult. The amount of paperwork and stuff, the documentation they need. And for many people, they just can't do it. So private lending fits into that bucket where people just don't qualify for traditional lending. So private lending typically is they're shorter terms, whether it's 6 months or a 1-year term. So you're going to be paying slightly higher rates than a bank rate or a B lender, but it's designed to help people solve that problem, whether they've got debt, whether they've got, lower credit, or whether they just don't declare enough income, whatever that might be. We're helping them solve that problem. And 1 year is kind of the goal. to get them, whether it's a purchase or a refinance, a second mortgage, a debt consolidation, whatever that might be. We set a 1-year term. We set the goal of, hey, let's try and get you out. Let's get you back to the bank so you don't have to continue paying these high rates. And a high rate, can start as low as 8%, as high as, 10 or 12 or even 13% interest on a second mortgage. So you don't want to do that forever. So whether it's a few months or a year or beyond that, you kind of want to have a goal to get out of that, long-term plan of paying higher interest and get back to your bank.
Yeah. I mean, I think you raise a very good point. Like, it's really important to have an exit strategy. Like, you guys don't want to have that capital deployed on that kind of asset for a long duration, nor does someone want to pay that. Can you, I guess, highlight the customer journey? So you don't work directly with individuals. They have to come through a broker. They put a formal application in. You kind of review that together and get to know the story a little bit. Like you said, minimal documentation compared to, working with a big bank, especially if you're self-employed. And then the fees associated with closing, are there additional fees like lender fees or legal fees or anything like that people should be aware of that they would incur before entering an agreement with you?
That's right. Yeah. So typically most private lenders are really equity-based lenders. So you're kind of looking at the property first. I guess to back that up, how do people find us? Well, we work directly through the broker channel. So you can't just apply to us directly. We would send you back to the broker and deal directly with the broker, because the broker, they have access to multiple products. There's multiple lenders like us. They have more options. We don't want people to come to us directly because we might not be the best product for them today. So we work directly with mortgage brokers who bring the client. So they've tried to find a solution for them. And they've said, hey, well, you know what, this might be the best or only option for you at this point. So that's how they kind of find us. And so we're kind of considered an equity-based lender. So first off, we look at the property. So number one, where's the property? Is it in a good location? Is it serviceable? So not everyone has that same lens, but we want an average price point property. We don't want log cabins on acreages for $2 million. We want kind of average price point, regular properties. So that's kind of the first thing we kind of look at. Then we look at, like, do they make enough income? Can they make the monthly payments? And then we look at the kind of the credit, and then we look at kind of the exit strategy. So, but number one is the property. If the property's in a good location, it's strong, and there's enough equity, if it's below that 80% or 75% of the home's value, when we say loan to value, it's a really important piece of the puzzle, is that if your house is worth $1 million, well, we'll loan up to 80% of that. So we'll give you $800,000 on your home as a maximum. Typically, it's 75%. In our whole portfolio, it's about 65%. So that's our average loan to value in our entire portfolio. So that's kind of how it works. So the loan to value is important. The next piece is the appraisal process. So we rely heavily on not the value of realtors, of our third-party appraisers.
Come on now.
That's great to get to evaluation, but at the end of the day, we need a full appraisal. Yeah. There's a cost to do that, and realtors' opinions are fantastic. We rely on them.
We just do it differently,
Yeah, and that's true. And we look at the lens of, like, when you foreclose on a home, you probably sold foreclosed homes and maybe you have, never get top value. In fact, you get significantly less. So we look at the fact, this house is going to sit on the market. It's in foreclosure. Someone's going to want a discount. There's a reason why it's in foreclosure, because they didn't pay or various reasons. So we never get the maximum value in event of a foreclosure. So how we get to the foreclosure, if we do a mortgage and that person doesn't pay us, well, we have to foreclose on that home. And it's a process, it's expensive. At the end of the day, we have to use a realtor to sell that. So we rely heavily on our appraisers. So we select in every community that we lend in 2 or 3 appraisers that we know, we trust, we build relationships with. And we say, hey, we trust your work. So we know if you're saying the house is worth $1 million, well, we believe that if we had to sell that in a foreclosure, we would get $1 million for that. So we will loan up to X 75 or 80% of that home's value. So that's kind of how we operate. And so far it's worked really, really well. So we're pretty well protected. So from an investment, we can talk about how to stimulate and how we get investors and then how we lend that out. But, it's a pretty strong investment portfolio because, we have $50 million plus or minus, and 65% is our loan to value in that portfolio. So it's pretty low. You might think we're going always to 80%. We aren't actually. We're doing some lower loan to value stuff. But, if someone doesn't pay us, well, we know that we have a decent property in a decent area. It's probably an average price point. And if we have to sell that, if you don't pay us, well, we get your home and we resell that. And, we don't lose money that often. Yeah. We do if the market turns. But to go down, I don't think the Okanagan is going to have a 25% reduction in their price. Like if you bought $1 million home, I don't think in 6 months it's going to be worth $750,000. Something terrible would happen. I just don't.
Yeah.
Do you see that happening?
The lake would have to dry up and fill with oil or something like that.
You know what? So it could happen.
Yeah, Matt would take a vacation. And
I think we'd be in a lot of trouble. And I mean, our investors would be in trouble. I'm an investor and a partner. So my family, we'd all be in trouble if that happened. But I just don't think that happened. That's going to happen.
Can we talk about the investment side a little bit then? Like if somebody does want to invest with you, what does the return generally look like?
Yeah. Can people invest with you? You got to be accredited or?
Yeah, totally. So how it kind of works is from an investment. So we have kind of two companies. Shelter Lending is the channel that brokers know. It's kind of our main brand. Yeah. That's how we lend our money. Yeah. It's technically the management company for our investment arm. So we have a company called Northern Alliance Financial. And basically that is like an exempt market dealer. And not to get overcomplicated and boring, but an exempt market dealer basically allows us to raise money. So we use that exempt market dealer to raise money for our mortgage investment company. And so we have to qualify every person that comes in our door. So most people are going to qualify for some amount. So you have kind of like accredited investors, you have people who have like certain net worth, certain income, so they can invest whether it's 10% or 50%, up to 50% of their investment portfolio. So we are regulated by the government many, many ways, many facets. So we aren't allowed to just take all your money. Yeah. Like if you've got 100,000, it's all your savings. We aren't even allowed to, even though if we say, yes, I want to, I can qualify. We can't do that. That's how we're regulated. So it's a good thing, but sometimes it inhibits us to get it. And so as people of a certain age too, there's different qualifications. Once you hit 65, just more things that you have to do. So we can take anybody's money at some point. There's only so much that we can take because there's a certain family and friends exemption as well. If you don't make enough money, we can take just a certain portfolio. So we have a minimum investment of 25,000, and we've been doing this since 2015, and we've been paying a steady return of 8% since 2015.
Nice.
We dipped as low as 7.5%, and we've been as high as 8.5%. But in just about 8 years, have an 8% return is pretty fantastic, actually. And in a market that's kind of gone up and down, and we've seen different things. There's, some investments that might pay more, but I think having just a steady, nothing is really kind of sexy about what we do. We're invested in mortgages. We're pretty vanilla, but I mean, it's from our investor perspective, it's like we're so steady. And so we pay a quarterly dividend. So that 8% is going to annualize and compound. And so we pay a quarterly dividend of 2%. If it's 8%, it's 2% or a little over. This year, we're on pace for about 8.35. So we'll pay a little over 2% every quarter. So most people are going to reinvest that dividend, but many people take it out, as income. So that's their income fund every quarter. They've got 100,000. They're getting, $2,000 or 2,500 every quarter. It's a nice little to live off for many people.
Cool. So to kind of simplify private lending really for both arms that you have, you're essentially a facilitator for, you take people's money, you find somebody that needs that money, you provide that safe transaction, secure it to a property, have lawyers on both sides sign off on everything, and you guys collect a small margin. Obviously, somebody gets to use your product, somebody gets to make money, and you're just kind of the middleman making those partnerships.
That's exactly right. So we just have to take a big pool of fund. You have to qualify for that fund. We have to make sure everything is above board. Yeah. And then Shelter Lending, the management company, it takes a small percentage, a 1%, 1.5% to manage all that money. And then Shelter Lending will collect some of the fees, and we can talk about that too. But that's how we protect it. So our money is kind of safe and held in one fund, but it's invested in 250 mortgages. Yeah. So we do get the odd foreclosure. It's like less than 1% of our portfolio. And so, when we get a foreclosure, even if we did lose money, there's 250 other mortgages that are still paying. Yeah. So, it's really safe in that way. Like if you have 10% in foreclosure, if you got 25 people not paying and more than that, like it gets kind of scary, but with 2% is the most we've ever had in foreclosure. Yeah. And even of those, like, let's say we had 5 in foreclosure at one time, 1 out of 5, you're maybe in jeopardy of losing money, and you may not lose money on that property. As we've grown, we were 5 years ago, we had, like $5 million, and now we've got 50 million. So we're kind of growing quickly. So sometimes our biggest inhibition of growth is really getting new investors. So we've grown kind of organically and naturally. And now, our new investors have brought in their friends, and we've got our families, but at some point now we need other money. So that's kind of our next step, is to how do we grow, is to bring on other investors to kind of help us grow and raise the bar a little bit. But we have some really good momentum. We've got a bit of bank money, and it's a good thing we got going on. So we're
nice. Yeah, that's fantastic.
Can I ask, so, obviously there's some negative media for good reason. About 5-6 months ago, there's a guy in Victoria,
Greg Martel.
Yeah, Greg Martel. So he ran essentially I don't want to say a similar organization whatsoever, but he facilitated similar mortgage products where he brought in investors. And I mean, I can't really speculate on anything at this stage, but he's essentially left the country and there's been a lot of investors with shortfall of money. Can you just say a little bit about his business model? Again, like not to dig in anything too deep, but how did that happen? Obviously, you guys are protected. I've worked with you before. I know the properties you lend to. You're really picky. I put in an application for myself. Sorry, I got denied. It was a cool property. But like, again, I just want to tell the listener completely separate business models. But if they do hear of that and they're thinking of investing in with you, what are the safety margins that differentiate you guys?
Yeah. Super sad to hear that because I mean, I think he raised like, I don't know, a couple $100 million, like 150,
like 240 or something.
Yeah, it's incredible, which is incredibly hard to do. And he was just bringing on new investors. It essentially was a Ponzi scheme. Like he had some properties that he was lending on, but he was bringing on new investors to basically pay the dividend on the existing investors. And no one you could never get your money out. So if you're an investor with us and you have $100,000 and you say, well, my kid's going to school and whatever, I need my money. We have to give you that money within 30 days. It's part of our legislation. So we always have a capital available to do that. We always have a buffer, and no one could get out of that fund. So it was just like
was really no one auditing? I mean, BCFSA or
that is the saddest part. There was no one really looking over his shoulder. What were the properties? Like you can go into our portfolio. I can show you right now our whole portfolio. I've got a map of exactly every single loan, where it is, how much, the loan to value. Cool. So it's like you could be like, well, tell me about. Well, I'll show you my whole portfolio. Yeah. So the fact that no one was doing that, there was no accountability, and now all these investors are really. It's a super sad situation. It tarnishes the reputation of highly regulated, because we are so highly regulated. It's just incredible for you. I mean, if you ever want to invest with us, you'll see like, wow, this is a lot of work. Like I don't just give you my void check and away you go. It's a couple of weeks, which is good because the investment you're getting into, but how did those slip through the cracks? Well, that's a great question for BCFSA and FinTrack. Like how did they allow him to take on new money?
I guess they must be tightening regulations or there's going to be an impact to that. And you guys will obviously feel that as well. But incredibly sad to see that happen. Yeah, but I'm glad there's companies like you guys that are outstanding in the industry.
Yeah, and we're definitely more we're certainly not the biggest out there. We're certainly on the more boutique side of things, which is why we do some interesting things, and we go into some smaller communities. Some of the places we lend, like we're in BC, Alberta, Manitoba. So, we lend in Winnipeg, for example. We lend in the Kootenays, where many lenders just don't go to places like that.
Yeah.
Like even Summerland, a lot of people just, don't go in there for some reason. And, even Northern BC, we lend in. So we kind of do some things that are more creative, where we don't have to be quite as competitive on maybe our rates, but we'll go into some markets where other lenders won't go. Yeah. So that's kind of what a little bit maybe differentiates us.
And you guys have underwriters on your team that, obviously I deal with you, you put it to your team, review the file, but really make sure it's a strong property. Yeah. And then to talk about maybe a little bit, Matt and I have both used this in transactions. Matt, do you want to talk about, I know recently.
So just anecdotally in my own career, I had a closing where my buyers were short $50,000 and they didn't know that until the day before. So we called a private lender, we got a loan, it needed a 1-day extension instead of a month extension, but they were able to close their property. Now they're going to go get a regular line of credit, pay off the private mortgage. Without that product there, they would have been kind of up the creek here.
Yeah. Right? Well, in that scenario, I guess the option would be they couldn't close, they would lose their deposit, they'd be sued.
Possibly be homeless.
Yeah. So a small cost on that private mortgage, whatever, $50,000 could save them potentially hundreds. For me specifically, I used it on, one lender, it's a large bank. They're kind of maroon and yellow, but the way they did their rental offset is they would only use 80% of the rental income on a refi, not on a purchase, 0% on the purchase for this specific building. So we had to close with a private lender. And then 3 months later, we were able to switch out to them and use the appraisal with the 80% to qualify. So again, a unique way to get it done. But again, the fees just kind of get built into your pro forma of, okay, if I'm going to buy this for $700,000, it's kind of like now I'm buying it for $712,000 because this is the only way it can happen. In addition to that, there's lots of reasons to use private lenders. If you just need to consolidate debt, or even right now, the CEBA loan. So for small businesses, over the past couple of years through COVID, they gave out a $60,000 loan. If you pay $40,000 of that back, you get to keep the $20,000. A lot of small businesses don't have the liquidity right now that it needs to pay back by January. So you could easily take out a private in a second position on your house, pay off that CEBA loan. You've net gained $20,000, and then you come up with an exit strategy in the next year. So there's lots of reasons for it. One other example I'll highlight is, when we're talking about rates, I love the way you guys generally do the rate. So it's more about the loan to value. You can shed some light on this, but with most A lenders, credit unions, the rate is the rate. There's a small difference depending if it's insured, not insured, 20%, 35% equity. But with private lenders, it's usually like a hard cap, 80% loan to value, obviously for security reasons. But the further you go down in loan to value, so if you're at a 50 loan to value, the rate's pretty attractive. So I have a client, we're closing next month, 50% loan to value on a house in Kelowna, and the rate was like 7.9%. There's a lender fee associated to that. So they range between, you can do a 0%, 1%, 2% fee, and that affects the overall rate. But when we're talking about a 7.9% for a private mortgage, like that's almost current residential rates right now. Yeah, it's a huge down payment, but they wouldn't qualify otherwise. So this is exactly what we're talking about. Self-employed, they didn't pay themselves. Their accountant saved them, $20,000, $30,000 in income tax, but now we have to use a private lender. So maybe the interest payments are a few $1,000s a year more than they would be, but they save on tax. So you got to work with the right people and walk through the scenarios.
These bridge loans, it's actually incredible. We've seen a ton of these. That's actually, I didn't really bring that up, but you just alluded to it.
Yeah.
There's the closing dates just don't match up. So you need money or there's a shortfall. So we are seeing a lot of those. So they've got a property if you're selling and you're purchasing. Well, what we do is we take basically both properties. We blanket one as a second, and then the new purchase would be the first. And as soon as that other property sells, well, all the proceeds go into the new loan. And we have both properties. So it's kind of a no-brainer for us. And, you're only doing it for a short period of time. So the rate is not super relevant in a short-term loan. But, that was one of the things that we saw. Especially during the pandemic when people were closing right away, the banks just couldn't do it in time. Yeah. So we saw all this business come to us. And you talked about the CEBA, but we see a lot of CRA debt. So many people are self-employed and they're just not paying their taxes. We saw one. This is incredible. Someone owed $250,000 in CRA GST. Like they just didn't pay. They're self-employed. They were making like $250,000 a year and they just didn't pay it. And so that was how much their tax bill was. And so they basically used the equity of their home to pay that out. And with CRA owing, you can't get a loan. So most lenders won't give you that. So they come to us, they take a second mortgage. They have a first mortgage with Scotia or TD, and then we'll give them a second mortgage of $30,000 or $40,000 to pay that CRA debt out. And then they can go back and refinance because the only thing holding them back was that CRA, that tax stuff. So that's where private lenders come in. And you're not paying 20% like a personal loan. You're guaranteed against your home. It's kind of like it's just a bit more than like what a HELOC would be, but it clears that debt, whether it's a bunch of different debts like that, or it's just like a tax debt. Private lending makes sense because they're short terms and we typically do an open loan. So, whether you find money or you get inheritance, you find other cheaper money. Well, great. Pay us off. Like, you don't want to be paying us. As I said, 1 year is a long time, but most of our churn is actually less than a year. Yeah. So we encourage them to pay out, find an opportunity. And that's why, you have access to all these other lending products. Great. Utilize them. We're there for a niche. We're not trying to be everything to everyone, but, bridge loans, CRA, second mortgages, purchases, those kind of things. We're there to help when the need arises.
Well, it's such a great tool you touched on. If somebody is only being held back because they have arrears in CRA, or maybe their credit score is like 5 points too low, and we're like, okay, we'll just pay off this small debt, and then boom, we're into that A lender for a better rate.
Yeah.
You just got to make sure you have that exit strategy. I don't want to see people basically, see this pain be alleviated and pay off this debt, and then, back to the roulette wheel. Yeah. One thing, can you highlight for our listener, first position, second position?
Sure.
The two differences, the risk that you guys mitigate, maybe the interest rate difference on both of those?
Right. Yeah. So when you're in position, so if the first mortgage position is basically the first position, and behind that can be a second or a third or a fourth charge, whatever that might be. So, in the event of a foreclosure, if you're in first position and that sells, well, whoever's in first position gets paid first, and then second, then third. So the higher loan to value. So let's use $1 million property, for example. And if you have a first mortgage of $700,000 and then you have a second mortgage of $200,000, and then you have a third maybe charge of $50,000. Well, you have $950,000 or roughly so. The first person when that forecloses, all the sale goes to paying the legal fees, and then the first mortgage gets paid, then the second mortgage gets paid. So sometimes there's just not enough equity available in that property, especially as foreclosure properties don't sell for as much as that. So the charge where you're in position is really important. As a lender, we actually have the opportunity to actually pay out the first. So let's say the first mortgage is not being paid. This is because we do a lot of second mortgages. Sometimes the first mortgage is not in good standing, and so the first mortgage wants to foreclose. But the second mortgage is in good standing. So they've been paying us the entire time. They're fine. So we can actually pay out the first mortgage and take the entire mortgage on ourselves. And then we can try and collect from the borrower, try and come up with a plan and things like that. Because sometimes like banks, they're very rigid in their policies, where a borrower, they might have I can get the money, or we can come up with a creative solution. So we will actually take over the first mortgage. And sometimes if we're in second position, to help the borrower, give them more time to figure their situation out, whether they're going to sell the property themselves or refinance with another lender. So we have the ability to do that. So that is some of the kind of unique things that you can do as a private lender, where banks' policies are just super, super rigid.
Yeah. Yeah. No, you guys are so common sense too. And it's such a great tool to have, not only to, renegotiate different debts and navigate to a different lender, but just purely on the fact that, if you want to close on a property as an investor, or you see value in a property and you need a quick close, some lenders just can't facilitate that in the time frame that you guys can. Like, you're so fast.
Yeah, we're a small team. We can make decisions same day. And so, I think you asked the question about documentation. The amount of documentation that lenders want these days is it's outrageous.
Yeah,
like it takes weeks to just get the documentation. And so, in what we do, generally speaking, we need an appraisal from an appraisal. We need the credit bureaus, which you'll probably have, and then we're probably going to ask for bank statements. We may or may not ask for NOA. We don't ask for pay stubs. We don't ask for many, many things. So we're going to ask for 3 or 4, maybe 5 pieces of documentation to go to fund it. And so, if you bring us a deal today, we can make a decision, in the same day. We can have a commitment letter out, and, in a week, we can have the funds, ready to go. So that's the kind of the advantage we have is, we can make decisions quickly. We can look at, from a common sense approach, and we can get that deal closed because it's closing in a week, and all my lenders have said no. So I don't, you don't have time to I'm not going to be able to get this piece of documentation. So you look at the property first, and then, you kind of make it work from there. So that's the kind of the fun thing about private lending, is that you can get creative and do some things that you can help borrowers out when they need to.
Yeah, that's incredible. And as an investor, if someone's listening to the show, if you want to buy a property and you want to go in aggressively on the purchase price, and say Matt speaks to the listing agent and they figure out that, hey, we need to close in 3 weeks. We have another offer that's coming in, but it's got a bunch of subjects and the dates don't line up. You might be able to shave off $10,000, $15,000, $20,000 on the purchase price because you can close in 3 weeks with a private lender. Well, you just mitigated your higher interest, your lender fee, and then you exit out in 6 months. Yeah. And, it's a win-win. You get a property for under value, as long as you got to have a bit of an open mindset to it. I do feel, unfortunately, that's probably the toughest thing for me to navigate with clients is, hey, here's an opportunity. We can work with a private lender. Here are the fees. Here's the rates. And people get a little bit nervous. But I like to try and break down options and, hey, we could do a 30-year amortization, maybe interest-only payments. You guys are able to mitigate the monthly payments, although the interest rate's higher. Yeah. But if it's 6 months on interest-only payments, it's actually similar to what they'd be paying on an A lender. It just kind of delays the fact of paying off principal, but it gets you into the property.
It does. And even for people who have a lot of equity in their home, almost like a reverse mortgage, we'll do prepaid mortgage. So someone's I'm getting money in 6 months. Well, we can prepay that mortgage for 6 months or for 12 months for the entire term, which is actually incredible. So it allows them to keep their entire cash flow. There's a little more risk as a lender, and we have to kind of mitigate some of that by reducing the loan to value. But for someone who's they're coming up or they're paying whatever it is, we can prepay that entire mortgage. And that helps a lot of people out of a very difficult situation because they just don't have enough cash to pay for this year. They're selling it, whatever it is.
That's incredible. I didn't know you guys did the prepaid.
Yeah.
Wow. Awesome.
So that's cool. And so we kind of touched on fees and stuff and how they work. And I'll just kind of highlight that. So in private lending, basically the lenders, they charge a fee. It's not like the bank where you get no fee. So we charge, I think you said 1% to 2%. So depending on the mortgage, you charge 1%. So that basically comes off the proceeds. So if you're getting $1 million mortgage and it's a 1% lender fee, that will be deducted from the $1 million. So you might need to have a slightly higher mortgage, to come up with money. So, and then generally a broker is going to take a fee as well. And then the legal fees are all deducted from the proceeds as well. So the borrower pays the legal fees. They also pay their own legal fees. So you have to factor some of those costs in.
Yeah.
But at the end of the day, again, if you're closing quick, there's many other negotiating tools that, hey, we can close quickly. You can maybe get a better deal on the other side. And, it's not forever. So to distinguish private lending, there is another arm of private lending. Like people can lend their own money individually on mortgages. I can lend you $200,000 and I can register that on your house. Anyone can do that. There are some regulations of that, but if that's a true private lender, which are heavily unregulated, and you're only supposed to do so many of those a year. But that is a segment that some people have their own money. They like to lend it out. They like to do it. Again, you're invested in one property, one person, one individual mortgage. And there's a lot of other, negatives to that where, we're a large fund of mortgages, a pool of mortgages, essentially. Yeah. So from an investment perspective, it's much, much safer. And even from a broker's perspective and a borrower perspective, because, we don't need our money back in a year. So if something happens and you need to renew your mortgage, well, we renew, 99% of people who are paying with us, we renew that mortgage. So, it's not like we're going anywhere and we need our money back because we don't. We'd like you to pay out, but that's only if you can get refinanced or your situation change, you sell your property or whatever that is. Yeah. So we renew everybody who wants to renew with us. So that gives peace of mind because that doesn't happen. You hear a lot of people are coming to us and saying, well, my lender didn't renew with us.
Yeah.
They were in good standing, but they want their money back. And so then we have to kind of come in and save the day. And I hate to hear that because, you have a mortgage and now you're finally, I've already gone through this process once. I don't want to do it again. I just want to renew. Like I just want to keep going, but they don't want to do that. So anyway, just an interesting little piece there.
Yeah. And if somebody is looking to lend out $200,000, I'll take it.
Yeah, totally.
Yeah. The fee, I'll just touch on the fee as well. Like you said, yeah. So generally as a mortgage broker, there is no fee to the client. If we're working with banks, monoline lenders, they just pay us. It's the commission based. We're bringing them
the lender pays.
Yeah. The lender pays. For private, like you said, that isn't the same arrangement. So we do have to charge a fee as a broker. But again, like the fees do kind of add up in these privates, but for the situation, it's a great, valuable tool.
Yeah.
Okay. Should we dive in a little bit for West Kelowna? You you did a term in City of West Kelowna. You've been there since 1990?
1990, yeah.
Awesome.
My family moved from Winnipeg and thank them all the time for making that move.
Yeah.
When I was a young kid. So I went to Rose Valley and grew up in West Kelowna. So it was pretty cool. So yeah, in 2018, there's election every kind of 4 years. And I hate politics. I don't really, so if anyone know me, it was very confusing what I would do at the time. And so, probably 2 months before the election, this is the kind of a cool story and I'll share with you. 2 months before the election, didn't even know anything about the city, of politics, whatever. I'd never even been to City Hall.
Yeah.
So I just I literally heard I believe God was talking to me, but he's just hey, you should check out the election. So I was like, what? And so then I went online and checked out the election, whatever. Week goes by, nothing. And I'm driving home and all of a sudden I hear, you got to go to City Hall. I was like, what? So I went to City Hall and this is what I said. I don't exactly know why I'm here, but I think there's an election coming up. And then someone was, very gracious and they spoke to me. Here's the election. They gave me a package. And I was like, oh, this is super interesting. Yeah. Another week goes by, just nothing. I put that on my desk. I knew by here goes, got to open that package up. I was like, what? So I opened the package up and I was started looking through the package about, to run for city council. And I was like, I don't know what this is, but I have to do this. I've never felt more called to do anything in my life. It was incredible. So then I was just I actually threw it. I was I'm putting my name out there so I can be humbled. That's what I thought it was. I was there's no way that I can do this. So anyway, So I ran and then, me and your other guest, Stephen Johnson, we both got elected and, he was the top vote and I got the second most votes. So it was pretty cool because we actually ran against 6 people who'd been elected, who were rerunning. And, to do that is the odds are so low. The incumbents, over 90% chance that they're going to get reelected. And the fact that he was the number 1 and I was the number 2 spot was really showed that the community wanted change. They wanted a difference, in leadership. And me and Stephen, we were able to get elected and, we made a lot of changes in 4 years. The city looks a lot different than it did before we started. And, we just I grew up in my community and I love where I'm from. And I was hey, I can't sit on the sidelines. I have a voice. I can add value. I want to represent people who have families and people who are young and want to recreate because people were making decisions in our community who they're older. I would make those same decisions too. I was I get why you did that. you're 65. I would probably make that same one too. So I can't really knock any of the decisions made, but it's like, okay, now it's time to have a voice at the table of people who, aren't, retiree age. They want to be young and they want to do something and try and make it progressive. And like, I really wanted to have, growth in our city, whether that's right or wrong. I don't know if I still like, but that's what I wanted.
I think it's inevitable. So you just got to plan it.
So that's right. Yeah. So like, why would you try and say, no, we can't allow any more people? Like, well, someone had to make my subdivision where I grew up. Someone had to say yes to that. So how could I say no to the next people? It's like, that is the most NIMBY type of attitude. And it's really hard to see that go on when it's like, we have to, like, people want to move here. Why would we say no to that when someone said yes to where you live? It's not really fair and unreasonable, because we have a story, and my story is created because the development got approved and I said yes. And so I want that next story to happen. There's a right and a wrong way to do it, but we still need it, and people need a place to live. And why wouldn't they want to live here? I want to live here. We all do.
Yeah.
So
what happened? How come you opted out of term 2?
Yeah. So I didn't rerun. So we started fostering, kind of in my term, and we now have more foster kids, and we actually have a big trip planned. So we're actually going for 3 months. Me and my 3 kids and my wife were going to serve in an orphanage in Mexico for a month. Yeah. And we're going to go to Guatemala for 2 months and work in a school and a hospital there, and
amazing,
do some stuff there. So we're going to take our family and kind of do it. So I had told, like, like to rerun for council, and they kind of had said, the mayor at the time and our kind of staff said, like, you can't be gone for that long, like you just can't miss that many meetings. And so I said, what, this is a trip that I just have to do. And so I knew that I wanted to do it in this 4 years, and then a week ago we just booked our flight, so we just kind of confirmed everything with this orphanage we're going down to serve. And so we just want to, like, experience something, like, we have it so good here, and to now and go and to be in a place in the third world and to see, like, my family, my kids see something that they've never seen, and us be able to just serve and give back. Like, I'm just selfish by nature. So I need to go and do something that's like, hey, this isn't about me. Like, we can actually help. And so, it'll be a really great experience. We're going from January to March. We're going for 3 months. And, it's, as your kids are younger, it's easier. The older they get, the more complicated it gets. So that 9's my oldest. And so we're going to just take them out of school and learn some Spanish. And
what a good experience for the kids.
Yeah, it'll be really cool. It's a lot. It doesn't just, like, these don't just kind of happen on their own. Like, I was like, made a lot of intentional steps. And my company is amazing. Like, we have such good people. Like, we have just decided, hey, we care about our people. We want to have a work-life balance. We want to love what we do. We want to enjoy it. And so let's, like, we all are doing trips. Like, we went on a company trip. We're doing all these types of things. And so everyone on our team, like, we all have families, and, we definitely have said, hey, we care more about, like, the balance than we do about just the work. So, there's a sacrifice sometimes, but at the end of the day, rather invest in what matters in the long term than, some work stuff. So anyway.
Cool.
For you.
I love that.
It's just coincidental that you're leaving for the whole winter. And
no, I wouldn't want to miss, January and Kelowna. So slower timing. I mean, in our business, it's definitely slower timing.
That's fine.
Picks up in March. Exactly. So
I love that. That's going to be awesome. Yeah.
So thanks for asking. Appreciate it.
Okay. Well, we're love having you on. We got to be conscious of our time here, your time. So can we dive into some questions to wrap this up?
Yeah, absolutely.
If you could buy one property in the Okanagan in the next 12 months, what would it be?
Man, I got to stick to West Kelowna. I mean, Pritchard Drive is kind of, that's probably my favorite spot. If you could live there, no price tag, that's where I'd want to go. It's a great spot and right on the lake. And, secondly, I'd like to be like, way up in like up Bartley, like kind of remote kind of acreage and, where you're overlooking the lake. If money's not an option, I think you're on the lake.
Yeah, it's a tough choice. Hey, like I want the nice lake view, but I also want to just walk 10 steps and jump in it.
Yeah, I know. So it's, you both would be great.
Yeah.
To get yourself 100-acre property.
The water slide.
Yeah, totally.
All right. What's the best thing you've ever spent like a small amount of money on?
Oh, man, that's a great question. Probably like just some education, like some like leadership courses and stuff like that, not expensive, but man, they've just like in books. Really, like on the leadership side, I've bought some really like good leadership books, and now it's more audio books and stuff like that. But just like anything like, you want to invest in, especially like leadership. I don't think I'm a leader, but like I lead my own family and my company. So I really, those have gone a long way. Reading and investing in that has just been like paid massive dividends, even though I'm a horrific leader. I'm much better than I was before.
You sound overly humble about
which is
important. Yeah, audiobooks or podcasts, Kelowna Real Estate Podcast.
Great. Fast growing podcast.
Yeah, exactly. Best book or quote you have for us?
Well, I mean, as someone of faith, like I love the Bible. And so, I mean, that's really where I get my truth and keeps me grounded. And so it's out of Jeremiah 29, but basically it says like, God has a plan for you to grow you and prosper, not to harm you. And so like, I think that like I serve like a God who loves me and like has a plan for me. And I just think that's like super cool. And it keeps me grounded and knows that I'm loved, even though when I'm being a terrible human and, I don't deserve it, I still feel that love. And so it's pretty cool.
Yeah. I don't know. You're saying you're selfish. You need to be humble. You're a terrible human. I'm looking at myself in the mirror being like, oh my God. Yeah.
I need to repent.
You don't want to spend like an evening with me. The real truth comes out.
Yeah. Right.
I used to see Taylor at night.
Yeah. I feel bad enough hanging out with Steve Johnson. I'm like, oh my God, this is the nicest guy in the world.
He really is.
Yeah, he's a nice guy. That's awesome. So how can we or our listeners help you?
Yeah. So if you want to invest, it's a great investment. We pay 8% to our investors. We have since 2015, as I mentioned. So it's a really great opportunity to be in real estate without actually being in real estate. So,
yeah.
I mean, my dad has a couple commercial properties and we were just doing the numbers recently and the value of that property and his return, he's getting like 3%. And I was like, wait, we should sell this. He's already an investor, but you can invest more and at 8%, it's, and you don't have, any tenants, any headaches. So it's interesting. So 8% is a great number. I mean, it'll probably grow and go up, but because, GICs are 4 or 5%. So, 8% 2 years ago was amazing. And it will continue to be probably 8% or higher. So that's the one way you can support us. And you can find us, at Shelter Lending. Definitely contact your local mortgage broker yourself to any private kind of lending needs. But we're always looking for new capital. So investments would be greatly appreciated. We'll take whatever you got. You can invest your tax-free savings, your RSPs or cash. So any of those registered funds we'll take, or even what's the new tax, first-time home buyers.
Yeah, the TFSA for the first-time home buyers. Highlight as well, like to contribute to your point, 8%, but speaking about GICs or anything else, like if we're highlighting inflation, obviously inflation goes up, normal rates go up. Like if your cost of living is going up, your return's probably going to go up because the private mortgage rate is also going to go up. And when it goes down, it goes down. So it's kind of a hedge against, just the current market.
That's so. And interest rates that we put out mortgages a year ago, the rates were way different. So as our mortgages kind of renew, interest rates slightly go up while our return will gradually go up to kind of curb that, like you said, inflation. But as interest rates have gone up, it's just there's a lag because we do kind of 1-year term. So as they come to renew or we put new mortgages on our books, well, it'll be a higher return for investors and everyone will be nice and happy. So
yeah, and honestly, I've seen less volatility in private rates compared to A lenders or monoline, whatever. Like they're changing their rates. I can't even keep up with them. Every week it's an email. Rates are up, down, up, down. You guys are generally like, this is kind of the range. It's property dependent. Let's get it on the desk, underwrite it and see where it lands. But it's very easy for me to say, we're going to fall somewhere within this range. So I love working with you guys.
Yeah. And, even like 2 years ago, like our rates really haven't changed. Like we just haven't changed our rates much. They've gone up marginally, but, they've been the same because we do a lot of second mortgages and it's around, 10, 11, 12%. They haven't really changed all that much. So we're more competitive than we've ever been.
Yeah.
The rates have changed and now we're ultra competitive, where 2 years ago we were a product, but now we're competitive product.
Yeah.
So we could be higher. We could be charging higher rates, but we want to stick and kind of stay in our wheelhouse. So yeah.
Yeah.
Awesome.
Great. Well, thank you so much for coming on and enjoy the upcoming travels. And
appreciate it.
Yeah, maybe we'll do like a remote recording when you're down there. You'll be speaking in Spanish the whole time.
Give you an update.
Yeah.
Thanks a lot.
Yeah. Okay. Take care.
Yeah. Thanks a lot.
Yeah.
Thanks for listening to the Kelowna Real Estate Podcast. Be sure to reach out and let us know how else we can add value to your Kelowna real estate journey. Please show some support by hitting the like, share, and subscribe button. This is sponsored by Matt Glenn Real Estate and Taylor at Venture Mortgages.